Hey guys, welcome back to the channel. Today we're going to be diving into target date funds, right? What are they? Some things to look for. Who are they good for? Stuff like that, So we're gonna go ahead and jump in this video. I don't like wasting time. So, investors in target date funds can set up a diversified portfolio and maintain a pretty solid asset allocation for decades without really having to put in much effort, right? But, there's a lot of options on the retirement savings plan menu, right? And it's really hard to know what to pick. But selecting good investments is only one part of the equation, right? You need to be able to pay attention to the overall portfolio diversification, make sure you're not taking on too much risk. You don't want to be concentrated, really heavily in one specific area, right? You don't want all your money being in, real estate or whatever it's going to be, like that one area, stocks or bonds. Like, you don't want all your money in one area, because if that one area goes down, you're going to lose a lot. So how the investments correlate with one another is also another part of this equation, right? Because modern portfolio theory says that investors can maximize their return potential and reduce the risk of losses by combining investments in asset classes that are not perfectly correlated with one another, right? A combination of investments like this is likely to do reasonably well in a variety of environments. Because as one asset's falling, another one's rising, right? That's what we were talking about earlier. If you have too much in one, right, a large portion of your portfolio goes down, you want to try to have all your allocations done fairly well, so that if section A is going down and section B is going up, section B is going to cancel out that loss, really, right? It's going to balance each other out. So, uh, once you get that optimal asset allocation and you got it established, right? Usually, you're going to be advised to rebalance back to the target allocations every so often, right? And to reduce exposure to risky assets like stocks, stock funds, right? The closer you get to retirement, right? Whereas early on, investors are focused on growing their wealth, right? And as they approach retirement, the focus shifts to preserving it, right? And doing this isn't really, it's not really impossible, right? There's a lot of people who, like me, right? We invest and manage our own portfolios, and do it okay. Don't lose money. Like, I think I'm up for the past year. I think I'm up over 70%. But we had a lot of stuff happen with the pandemic in 2020, so you could say some luck was in there as well, right? Um, but there's a lot of people who prefer to outsource the task of portfolio assembly, balancing, and gradually making the asset allocation more conservative, right? Well, that's where these target date funds are going to come in, right? Because they're going to do all this for you, right? So more specifically, what is a target date? What's in these target date funds? So a target date fund is made up of other funds. The underlying fund offers diversified exposure to a mix of asset classes, such as stocks, and these can be large cap, small cap, mid cap, foreign stocks, bonds, foreign bonds, and a lot of times maybe even like a small percentage in like cashlike securities and stuff like that. And they're designed to be held throughout a person's lifetime. And the asset mix shifts dynamically, becoming less risky over a person's career and into retirement. Right? The funds achieve this by rebalancing portfolios over time to become less focused on growth, lowering their allocation to stocks, and more focused on preservation, raising their allocation to bonds as the fund approaches and passes the target date. Right? The year in the fund's name corresponds approximately to the investor's retirement date, right? And target date funds have become pretty popular, right? There's a lot of money in target date funds. I think in early 2021, there's something like 1.6 trillion in these funds, right? And one of the reasons for that is because the Department of Labor's Pension Protection Act of 2006, right, designated these funds as what's called a qualified default investment alternative within 401k retirement plans, which are investment vehicles into which plan sponsors are allowed to place participants who do not make their own investment election, right? But the popularity also owes to the relative ease of ownership, right? Because they're really just hands-off investments that offered a decent, diversified portfolio of building blocks with professionally managed allocations and automatic adjustments. So, you might be asking yourself, well, what should I look for in these funds? Well, there's a couple things, right? You may be limited by your plan choices, but there's some characteristics that you want to pay attention to when you're evaluating them. Morningstar does a good job of this. I like looking at Morningstar for a lot of different things, right? But one of the first things we're going to talk about is low fees, right? Unlike buying a luxury car, paying a high price for an investment doesn't guarantee you a better ride. It's important to pay attention to the overall cost of the target date fund. Some providers are going to layer on these fees, right, making the resulting price tag represent not only the blended cost of the underlying funds, but also a layer of management fees that the advisor charges to implement the glide path, right? So we want to look for these low fees. An example of this would be the Vanguard Target Retirement 2020 through 2065 options. They range from 13 basis points to 15 basis points, right? And the portfolio is made up of low cost index fund, right? And Vanguard doesn't charge a management fee to handle the dynamic asset allocation piece for investors, right? But also, target date funds built around index funds tend to be cheaper than those built around actively managed funds. The average asset weighted expense ratio for target date funds was something like 0.5% at the end of 2020. Another thing to look for is an asset mix that suits your risk tolerance, right? Some target date funds invest more aggressively than others. So there's some funds in the BlackRock LifePath Index series that have an equity allocation exceeding 98% for investors targeting retirement around 2060, while the series JP Morgan Smart Retirement has an equity stake of 85%. Right, it's about 13 percentage points lower, right? And it's a similarly dated fund, right? It's around 2060. Investors can also drill down to the underlying exposure to foreign stocks, right? Maybe your risk tolerance doesn't, maybe, you don't feel good with having a big stake in emerging markets, right? Or fixed income. Perhaps you would prefer to avoid high yield bonds, just like the Vanguard series does, right? You can check out the on Morningstar's website. You can check out the portfolio tab, the fund quotes page, right? You're gonna find a bunch of statistics and stuff like that, and it'll be really, it's a lot of information they give you, and it's worth looking into. Another thing you want to look for is a glide path that makes sense. The rate at which a target date fund adjusts its allocations to stocks and fixed income over time is known as its glide path, right? You want to check to see how the fund invests over time and ramps down its equity exposure as retirement nears. Some invest more heavily in stocks throughout the life of the fund in the belief that a higher equity position and the higher returns that typically come along with stocks is necessary to ensure that investors don't outlive their savings. The fund analysis is divided into 6 sections. Each analysis begins with a summary in which the analyst provides a summary of his or her overall opinion. And a lot of times this is, it often discusses the most important or decisive factors leading to the fund's overall rating, right? And a lot of these analysis, for these glide paths, or like I said, I use Morningstar, so you can go look at these fund analysis and it'll break down all this information for you, right? So another good thing is one size fits most, right? For many investors, target date funds make a lot of sense, but they may not work for everyone, right? Outside of initially picking the fund, they don't offer investors control over their investment or allocation choices. Also, by choosing a target date vehicle, investors are limited to a given fund family's fund, right? Most target date funds are, they're going to use their own underlying funds to build portfolios. The drawback of that is that few fund companies offer best of breed funds across all asset classes. In addition, they're intended to be, used on their own. If satellite holdings are added, perhaps to add exposure to market sectors not represented in the target date funds portfolio, investors must take on part of the rebalancing task by recalculating the asset allocation of the entire retirement portfolio to make sure it's in line with the target, right? And some of these things aside, target date funds offer, a really good proposition for most people, for retirement, right? And there's no doubt the easiest path to setting up a diversified portfolio and maintaining a sensible allocation for decades is definitely to do like a target date fund. It's definitely going to be one of the easiest ways to do it, right? Here's my money, invest my money. It's diversified. You tell them, hey, I want to be retired, 2065, right? Let's say it's 2021 now, you just started your job, and you're like, hey, I'm going to be retired in 25 years. So that's 2046. So you find a target date fund as close to 2046 as you possibly can. And that's what you would invest in. So hopefully you guys got some good information out of this. Like I said, really go check out Morningstar. It's got a lot of good information on there and ratings and, a lot of analysis you can look into the funds. So, just go over there, give them a look around and all that stuff. I hope you guys enjoy this video. Go ahead and give it a like. Go ahead and subscribe to the channel if you guys are enjoying it. And until I'll see you guys in the next one, y'all be good.